The May numbers are in, and I'll be honest with you, when I first pulled up this report, there was one number that stopped me cold. Not because it was catastrophic, not because the sky is falling, because it tells a very specific story about where the market is heading, and if you're planning to buy or sell in Ottawa in the next 60 to 90 days, you genuinely need to understand what it means. Here's the thing about real estate data. The headline numbers almost always lie. Not on purpose, they just don't tell the full story. The media will take one number, strip it all out of context, and either panic you or reassure you. And neither one is useful. I went through every line of the Ottawa Real Estate Board May 2026 report, single family, townhomes, condos, the HPI, months of inventory, all of it. And I want to walk you through what I found, and what it means for your situation specifically, and what that one number is that I mentioned a second ago. We'll get there, but let me set the stage first. I'm Curtis Arnowski, and I'm a real estate agent with Royal LePage Team Realty right here in Ottawa. Now, let's look at the headline numbers, and then I'll tell you why they don't tell the whole story. Ottawa saw 1,616 home sales in May, and that is down 10.6% from May 2025. On the surface, a meaningful drop year over year. And if that's all you read, you might think, okay, the market is softening, things are slowing down. But here's what makes May interesting. Compared to April, when we had 1,336 sales. That's a jump of 280 sales in a single month, and the spring market is doing what spring markets do. It's moving. The year-over-year comparison looks softer because May 2025 was genuinely a strong month, and context matters. New listings came in at 3,351, and that's down slightly 2.2% from last year. And active listings are now sitting at 4,917 units, which is up 12.2% year over year. So let me put that in plain English. Sales are down year over year, but they picked up meaningfully from April. New listings are actually slightly lower than last year for the first time in a while. But active listings continue to climb because homes are sitting longer before selling. That accumulated inventory is what's keeping pressure on sellers right now. Months of inventory came in at 3.0 in May. For context, a year ago that number was 2.4. 2 years ago it was also 2.4. In the frenzy of 2021, it was 0.7. So we're clearly not in that kind of market anymore. But 3 months of inventory is actually a step back from April's 3.4, meaning demand kept slightly better pace with supply this month. And that's a small but notable improvement. Year to date, throughout the end of May, 5,453 homes have sold in Ottawa, down 6.3% from the same period last year and 5.5% below 2024. The trend of running below recent years continues. But zoom back further, we are essentially right in line with 2016 and other historically normal years. The frenzy was the anomaly. This is closer to what a functioning market actually looks like. Average sales price in May landed at $721,270, and that's down 0.9% from a year ago, but up from $712,184 in April. Median price was around $660,000, down 1.6% year over year, but up from $650,000 in April. And the MLS HPI composite benchmark, which is the number I trust most because it filters out what types of homes happen to sell, came in at $635,300. And that's up 0.9% from 1 month ago and up 3.2% over the past 3 months. That benchmark trend is the number I want you to hold on to. Month over month, values are still moving higher. And we'll come back to why that matters. Sales to list ratio across the full market was 98.7%. Sellers are still getting within 1.3% of the asking price on average. And median days on market was 20 days. Not a frenzy, not a buyer's dream either. Homes are moving. Now, let's get into each segment because the story is very different depending on what type of property you're dealing with. Single-family detached homes remain the strongest segment of the Ottawa market, and in May, the numbers make that clear. 904 detached homes sold in May, and that's down 8.6% from last year, but it's a significant jump from the 712 sales we saw in April. The average sales price came in at $868,968, essentially flat year over year, but unchanged from May 2025. And the median price was $800,000, which is actually up 1.3% from a year ago. The HPI benchmark for single family is at $723,800, which is up 0.9% from 1 month ago and up 4.4% over the past 3 months. So let me say that again because it's significant. The single family benchmark price is up 4.4% over the past 3 months, and that's not a stagnant market. This is a market where values in this segment are continuing to firm up even as the broader environment faces headwinds. Months of inventory for single family sits at 2.7, which is actually tightened from April's 3.1. New listings in this category were slightly down year over year, and sales jumped meaningfully from the prior month. The result in this segment is holding its ground, and then some. Median days on the market were 16 days, and that's the fastest pace of any segment in this market right now. And sales to list ratio was 99%. Sellers are getting virtually asking price. Year to date, the single family average price is running at $847,258. And the benchmark is showing positive momentum across every other meaningful time frame. And that's up 0.3% over 12 months and up 2.2% over 3 years, up 3.9% over 5 years. And here's my takeaway for each side of this transaction. If you're a buyer looking at a detached home right now, you have more inventory than you've had since before the pandemic. But don't let that calmer tone of the broader market mislead you about this specific segment. A 99% sale to list ratio in 16 days on market means well-priced detached homes are still moving quickly and attracting competitive offers. The window of relative patience in this category may be narrower than you think. If you're a seller of a detached home, the data supports real confidence. Median prices are up year over year. The benchmark has been climbing for 3 consecutive months. If you come in priced correctly, you'll have a successful sale. The market is rewarding well-positioned homes right now. Now here's where the May story gets more nuanced compared to what we saw in April. And I want to spend real time on this because it matters. 481 townhomes sold in May. That's down 14.3% from last year, and that's a reversal of the relative outperformance we've been seeing from this segment earlier in the year. Through April, townhomes were actually running ahead of 2025 on a year-to-date basis, but May pulled that back. Year-to-date, we're now sitting at 1,739 townhome sales, and that's down 2.8% from the same period last year. Here's the context. The average townhome sale price in May was $563,578. Months of inventory sits at 2.7, which actually tightened meaningfully from April's 3.0. The HBI benchmark for townhomes is at $557,500. That's down just 0.4% from last month and down 3.2% from a year ago. So what's the honest read here? The townhome segment is softening compared to where it was. Well, the May sales dip is real, but a couple of things are worth noting. First, inventory is at 2.7. It's still relatively tight by any historical standard outside of the pandemic years. Second, the benchmark didn't fall off a cliff in May. It edged down a little modestly. And third, the year-to-date picture, while now slightly negative, is nowhere near the kind of deterioration we're seeing in the condo market. The townhome buyer story still comes down to value. A buyer who is being priced out of the detached market can still get into a solid 3-bedroom townhome in Ottawa for somewhere around $560,000 to $580,000. And that spread continues to drive demand in this segment even when the monthly numbers wobble. What I'm watching closely over the next couple months is whether townhome inventory continues to accumulate. Active listings are up 28.3% year over year, or whether the demand that has underpinned this segment returns more consistently as we move into the summer. That will tell us a lot about whether May has a blip at the start of the new trend. And if you own a townhome and you're still thinking about selling, this is still a workable market, but the data is telling you not to wait indefinitely. A well-priced, well-presented townhome can still perform, but the window of the easy sales in this segment has narrowed compared to 6 months ago. All right, so this is the segment I mentioned at the start, the one where the numbers stopped me, and here it is. Ottawa apartment sales year to date through May is 758 units, down 29.7% from 2024. And if you go back to the peak years, we are now nearly 55% below the May year-to-date sales volume we saw in 2021. So let me say that plainly. The condo market in Ottawa has lost more than half of its sales volume compared to the pandemic era peak. And unlike March and April, reports where I could point to some of these stabilizing signals, the May data does not give us a clean floor story. 203 condos sold in May alone, and that's down 12.1% from last year. Average price came in at $433,165, and that's down 12% year over year. The median price was $385,000, down 7.2% year over year. And the HPI benchmark for apartments is at $385,500, which is up 1.5% from last month, but it was actually a positive signal, but still down 2.9% over 6 months and 6.7% over 12 months and 8.5% over 3 years. Months of inventory for condos in May was 4.8. And year to date, is still sitting at 5.3. For context, townhomes are at 2.9 and single family are at 3.2. Condos are in a completely different category, firmly buyer's market territory. Median days on market for condos in May was 33 days, and year to date, it's running at 38 days. That means the average condo seller is waiting over a month for an accepted offer. And that changes everything about how you need to think about positioning. Now, I want to be careful here because it's easy to read these numbers and think this is a catastrophe. The long-term ownership story is not destroyed. Owners who bought more than a few years ago still have equity, and it's real equity. Second, the month-over-month benchmark was actually up 1.5% from April to May. And that's the first meaningful positive monthly move we've seen in this segment in a while. And whether that holds through June and into the summer will be telling. I'm not declaring a bottom, but it's a data point worth watching. Third, and this matters for buyers, if you have been watching the condo market and waiting for conditions to improve in your favor, those conditions are here right now. 971 active listings, 4.8 months of inventory, median days on market of 33 days. You have selection, you have time, and you have negotiating leverage. The average condo is selling at 97.3% of list, and there's room to negotiate in a way that hasn't existed in this market in years. So here's my direct message to condo owners thinking about selling. You can sell. There are buyers out there, but you need to be honest with yourself about where the market is today and not where it was in 2022, not where you need it to be to make your numbers work, where it actually is. Accurate pricing and a strong marketing execution are more important in this segment than in any other right now. And that's exactly the kind of conversations I have every week with my clients. You want to have it? My contact is in the description. Now, let me zoom out now, because numbers in isolation only tell part of the story. Here are 3 things I'm watching closely after this May report. Number 1, the sales to new listings ratio improved meaningfully from 41% in April to 48.2% in May. That shift matters if it means demand kept better pace with new supply this month than it did in April. When this ratio is running between 40 and 60%, you're in a balanced market territory. At 48.2%, we're comfortably balanced. That's not a market in free fall. That's a market where both sides have a reasonable leverage and deals are still getting done. Number 2, the sales to list ratio is holding at 98.7%. Sellers across this market are still getting within 1.3% of asking. It's not a market where buyers are submitting offers at 90 cents on the dollar and winning. We're not there. The inventory is expanded, but the floor of values is held. That combination, more selection but stable prices, is the definition of a market that's balanced, not broken. And number 3, the 3-segment story is becoming clearer with every month of data. Single family with 2.7 months of inventory, a benchmark up 4.4% over 3 months, and a 99% sale to list ratio. Townhomes with 2.7 months of inventory, softer year-over-year sales, but still a functional market. In condos with 5.3 months of year-to-date inventory, a benchmark down 6.7% over 12 months, and a 33-day median time to sell. So these are 3 completely different markets operating simultaneously in the same city. The mistake people make, buyers and sellers, and frankly some agents too, is treating auto real estate as one market. It's not. Your strategy, your pricing, your timing, your expectations, all of it needs to be calibrated to specific segment you're operating in. And what's true for detached home in Canada is not true for a condo in Centertown right now. Not even close. This is where having someone who actually reads these reports and works in the market every single day makes a real difference to your outcome. So here's where we land. If you're a buyer right now, this is one of the better environments to be shopping in since the pandemic. More inventory across all segments, more time to make decisions. And a sale to list ratio, particularly in the condo segment, that gives you real negotiating leverage. The buyers who panicked and rushed in 2021 and 2022 paid the price for that urgency. And you don't have to. If you're a seller, the market is working, but it's working harder than it used to, and it's unforgiving of mistakes. Overpriced homes are sitting. Homes that are priced right and presented well are moving in the high 90s% of asking price. The difference between a successful sale and a frustrating 60-day experience right now often comes down to the first 2 decisions, the price and the marketing. And both of these are things within your control. If you're a condo owner specifically, whether you're thinking about selling or just trying to understand what's happening to your asset, I want to have an honest conversation with you. The data is what it is, but context, strategy, and timing still matter enormously. I'd rather give you the real picture than have to make a decision based on incomplete information. May 2026 told a consistent story with what we've been seeing all year, with a few wrinkles worth paying attention to. Sales improved from April. That's the spring market doing its job. Year over year, comparisons are soft, and that's the reality of 2026 running below a strong 2025. The balance in the market is holding, and that's what 48% sales to new listing ratio tells us. And the 3-segment divergence is becoming more pronounced with each passing month. This is not a market in crisis, it's a market in recalibration. And recalibrating markets reward people who understand what's actually happening, not people who are operating on assumptions from 2 or 3 years ago. Drop your questions in the comments, I read every single one. And if you want to talk directly, the link to book a call with me is in the description. And if this gives you a clear picture of what's happening in Ottawa right now, hit like. It helps content reach the people who need it.